Hello everyone, welcome to the market opening bell for Monday, February 23rd, your 10-minute guide to the stock market. Hong Kong stocks started the year of the horse with a low opening and closed even lower. The Hang Seng Index opened 48 points down with a decline, widening during the session to a low of 348 points at 26,356. It recovered in the afternoon to around 26,640 at its intraday high, but selling pressure returned in the final hour, closing at 26,413, down 293 points or 1.1%. The Hang Seng China Enterprises Index lost the 9,000 level, closing at 8,960, down 110 points or 1.2%. The Hang Seng Tech Index fell 156 points or 2.9% to close at 5,212. Mainland A-shares are on an extended Chinese New Year holiday break and will resume trading on Tuesday, the 24th, with Southbound capital flows post total market turnover shrank to 165.3 billion Hong Kong dollars. For the week, the Hang Seng Index fell a cumulative 154 points or 0.6%. The China Enterprises Index dropped 0.8% and the Tech Index declined 2.8%. Technically, the Hang Seng Index closed just below the 50-day moving average at 26,420 points. If it also breaks the 100-day line at 26,312, it will test the 26,000 support level. Three newly listed AI large model stocks went on a crazy rally. MINIMAX surged 14.5%, pushing its market cap above 300 billion Hong Kong dollars. Zhipu jumped 42.7% with total market cap exceeding 320 billion dollars. Haizhi Technology Group rose 28.4%. Other major AI-related stocks showed mixed performance. Blue-chip stocks with AI exposure were weak, with Alibaba down 4.9%, Tencent falling 2.1%, and Baidu declining 6.3%. Alibaba is expected to release its fiscal 2026 third quarter results, corresponding to Q4 2025 before the U.S. market opens today. Revenue is forecasted at around 41 to 42 billion US dollars, approximately 290 to 300 billion yuan, representing about 8% year-on-year growth. Earnings per share is expected between 1.68 and 1.91 US dollars due to massive AI infrastructure investments and market subsidies. Earnings per share may drop about 34% from last year's 3.09 US dollars. The market anticipates margin pressure, mainly because the company is in a period of heavy AI strategic investment. Key areas to watch include Alibaba Cloud growth, whether Qwen 3.5 model iterations can drive stronger commercial monetization, core e-commerce GMV performance against competitors like Pinduoduo, adoption of the new oil station promotion tool, and the revenue impact from the 88 VIP membership base, which has surpassed 50 million members. Robotics concept stocks in the Hong Kong market surged collectively last Friday, with DOBOT up over 21% and Shoucheng Holdings rising nearly 12% intraday to its highest level since October last year. On the news front, robot performances stole the show again during the Spring Festival Gala in the Year of the Horse. From Unit 3 Robotics nimble robotic dogs to GoBot's embodied intelligence robots, several hard-tech companies competed on stage. Behind them, Shoucheng Holdings plays a prominent role. According to incomplete statistics, among the robot firms featured, Unit 3 Technology, Galaxy. According to incomplete statistics, among the robot firms featured, Unit 3 Robotics, GoBot, and Noetic Robotics are all invested companies of Shoucheng Holdings. Shoucheng Holdings is Noetic's Robotics, largest external investor, having led the round in 2024 and continued to add to its position. Unit 3 Robotics made its third appearance on the gala. Shoucheng Holdings not only provided capital but also linked sales agents and application scenarios. Unit 3 founder Wang Xinxin expects global humanoid robot shipments to reach at least tens of thousands of units this year, with Unit 3 targeting 10,000 to 20,000 units. However, due to technical bottlenecks in embodied intelligence brains, humanoid robots remain in the early application stage. Oil stocks rose with PetroChina up 3.7% and CNOOC gaining 2.2%. CNOOC hit an intraday record high of 26.16 Hong Kong dollars, while PetroChina reached $9.64, its highest in over a decade. The move came as international oil prices climbed on concerns over escalating US-Iran tensions, with both sides ramping up military activities in Middle East oil regions. After the US Supreme Court struck down Trump's global tariff measures, Trump announced a 10% tariff on all global goods. Treasury Secretary Bessent said the government would use other mechanisms, including congressional authorities under Sections 122, 232, and 301, noting that 226 tariff revenue would remain almost unchanged. Meanwhile, thousands of global companies will seek to reclaim paid tariffs, with estimates suggested over $175 billion of collected tariffs at risk of being refunded. Many investors had expected Trump to find alternative routes to sustain tariffs. US stocks fell then recovered. Gold and silver prices rose and the dollar weakened. The Dow closed up 230 points or 0.5% at 49,625. The Nasdaq gained 203 points or 0.9% to 22,886, and the S&P 500 rose 47 points or 0.7% to 6,909. The VIX Fear Index dropped 1.14 points or 5.6% to 19.09. The Nasdaq China Golden Dragon Index tracking Chinese stocks fell 4 points or 0.05% to 7,549. For the week, the Dow rose 0.25%, S&P 500 climbed 1.1%, and the Nasdaq advanced 1.5%, ending the longest weekly losing streak since 2022. With the prospect of comprehensive tariffs being scrapped, news lifted e-commerce platform stocks. Amazon rose 2.6%, Pinduoduo and eBay each gained nearly 4%, and Etsy surged over 8%. Major tech stocks advanced, with Alphabet up 3.7% after Google launched its latest AI model, Gemini 3.1 Pro. Apple and Nvidia rose over 1%. Reports say Nvidia is nearing a $30 billion investment in OpenAI, replacing last year's long-term $100 billion commitment. Sources indicate the $30 billion equity stake is part of a larger round that could raise over $100 billion, valuing OpenAI at $730 billion. OpenAI plans to reinvest most of the new capital into NVIDIA hardware. NVIDIA will report earnings this Wednesday. Analysts estimate 71% earning per share growth for Q4 ending late January, with revenue at $65.9 billion, though forecast ranges are very wide. NVIDIA is one of only two Magnificent Seven stocks still up this year and carries 7.8% weight in the S&P 500. Making it highly influential. However, it faces sky-high expectations. It must not only beat estimates but also raise guidance for investors to remain confident in sustained AI investment momentum. Tesla closed nearly flat after cutting the US price of its top Cybertruck, Cyberbeast version, from $114,000 $98,990 to $99,990. Other Cybertruck variants remain unchanged. It is also ending the Lux package that included full self-driving and free supercharger access, which was added when prices were raised last August. Following AI startup Anthropic's release of cloud security tools, cybersecurity software stocks tumbled. CrowdStrike plunged 7.95%, Cloudflare fell over 8%, and Okta dropped 9.18%. The initial US Q4 real GDP growth was an annualized 1.4%, the lowest since Q1 2025, and well below the 3% forecast, compared to 4.4% in Q3. Consumer spending slowed to 2.4%, dragged by a 0.1% drop in goods purchases, while services grew 3.4%. Exports fell 0.9% after 9.6% surge in Q3, and imports declined 1.3%. Government spending and investment contracted 5.1%. Fixed investment accelerated 2.6%. For full year 2025, U.S. economic growth was 2.2%, down from 2.8% in 2024. The U.S. PCE price index rose 0.4% month-on-month in December, the biggest gain since February, and above the 0.3% expected. Core PCE also rose 0.4%. Annual PCE inflation accelerated to 2.9% from 2.8%, and core to 3% from 2.8%. With inflation heating up, traders now see slightly over 50% chance of a Fed rate cut in June per CME Fed Watch. S&P Global's flash PMI showed U.S. business activity growth at its weakest in 10 months in February. The composite output index fell to 52.3 from 53 in January. Manufacturing PMI dropped to 51.2 from 52.4, and services to 52.3 from 52.7. The University of Michigan February consumer sentiment was revised down to 56.6 from 57.3 preliminary, similar to January's 56.4 and still the highest since August 2025. One-year inflation expectations fell sharply to 3.4%, below both the preliminary reading of 3.5% and January's 4%, marking the lowest level since January 2025, while long-term expectations stood at 3.3%, lower than the preliminary figure of 3.4%. Our stock pick today is Sanhua Intelligent Controls, stock code 2050. Sanhua Intelligent Controls recently issued a positive profit alert, expecting net profit attributable to shareholders for the year ended December 31st, 2025 to range between 3.873 billion and 4.648 billion yuan, representing a 25% to 50% increase compared with 2024. This is mainly because the group has continued to consolidate its industry-leading position in refrigeration and air conditioning appliance components, fully capitalizing on opportunities from growing market demand while leveraging the technological accumulation and large-scale production advantages of its core products to drive sustained expansion in this segment, at the same time relying on its leading global market layout in new energy vehicle thermal management. The group has continued to secure high-quality orders through the demonstration effect of benchmark clients, further strengthening the performance growth momentum of its automotive components business. The two major business segments are working in synergy, providing solid support for the group's full-year results growth. With rising energy costs consumers are increasingly inclined to purchase energy-efficient and low-carbon appliances, which has propelled the development of the refrigeration and air conditioning appliance components industry. In addition, the rapid growth of the cold chain, logistics and data center sectors has brought broad development opportunities to emerging markets. In the new energy vehicle sector, advances in high voltage, fast charging and battery technologies have increased the need for rapid heat dissipation, driving demand for efficient vehicle thermal management systems and thereby stimulating growth in demand for related components. At the same time, progress in automotive thermal management technology is pushing components toward integrated and modular designs. High computing power requirements for automotive chips also call for intelligent thermal management systems to optimize heat dissipation, resulting in continuously rising demand for high-efficiency thermal management components. Furthermore, advancements in battery cooling and heating technologies, the development of heat pump systems, and the adoption of low global warming potential refrigerant alternatives are all helping to optimize vehicle energy consumption, placing even high performance demands on thermal management system components. As one of the pioneering companies leading the development of thermal management technology, the group has successfully entered the field of bionic robot electromechanical actuators by leveraging its expertise in motor manufacturing, together with its advantages in scale and cost control. With continuous technological progress, the downstream applications of bionic robots have expanded from the industrial sector to multiple industries, including medical services and logistics services. The wide range of application scenarios has stimulated growing demand for bionic robot electromechanical actuators. Recommended buy price $30.8, target price $40, stop loss $35. I do not hold the above stock.